thank you for joining. I'm delighted to welcome you to today's program on African fintech trends. This is actually the second installment of Lex Mundi's 2020 Middle East and Africa Forum, which is a series of monthly online seminars hosted by a different Lex Mundi member firm each month. Today's session consists of a 45-minute panel discussion, after which everybody will be moved into various breakout rooms. Breakouts will last about 20 minutes, after which you will all be returned to the main session to close things out. Both the main session and the breakouts will be recorded and will be made available to everyone afterwards. So with that said, it's my pleasure to introduce today's moderator, Ali El Shalakani. Ali is a senior partner at Shalakani Law Office, which is Lex Mundi's member firm for Egypt. Ali, over to you.
Thank you very much, Dan. So good morning, good afternoon, or good evening, everyone. It's a real pleasure to have you with us today. So as per Dan's sort of introduction, today's talk is going to be about fintech or financial technology, which, as many of you know, has become a very disruptive force in financial markets globally. A recent article in The Economist outlined that conventional banks now account for only 72% of the stock market value of the global banking and payments industry, which is down from 96% in 2010. So a very big change in just 10 years. Africa has not only embraced this revolution, but has in fact been a key leader in instigating change and using fintech as a leapfrog technology, similar to how most of the continent skipped landlines altogether and went straight to mobile technology. With around 66% of the adult population in Africa unbanked, fintech has a huge opportunity to drive financial inclusion outside of traditional banking systems and to provide access to finance. So before we begin, I'd like to point out a few obvious points. So Africa, of course, is a very big continent with over 50 countries and a population of over 1 billion people. Fintech is a relatively new phenomenon, and it can mean a lot of different things to a lot of different people. So with that in mind, I'd like to ask you all to be a bit patient, because we're not going to be able to cover all things fintech and all things Africa. But I think today what we're going to do is try and focus on a few key markets that have different features, but also some common trends. With that in mind, I'd like to introduce our speakers for today. So first off, we have Mikhail Szymanski, the CEO of the Mauritius Africa Fintech Hub and a board member of Africa Fintech Network. He was appointed in 2018 to help build the Mauritius fintech ecosystem with a focus on collaborations with the rest of Africa. We also have Noha Shaker, founder and Secretary General of the Egyptian Fintech Association. She is also the elected Vice President of the Africa Fintech Network. Noha has headed the Digital Ventures and Strategic Alliance division at CIB, or Commercial International Bank, which is Egypt's largest private bank, where she managed fintech innovation. Finally, we're joined also by Joshua Janks, a partner at Bowman, the Lex Mundi firm for South Africa. Joshua specializes in M&A, banking and finance, private equity, venture capital, as well as general corporate and commercial law. So I'd like to move straight to our talk. And my first question is going to be to Noha. So Noha, would you mind giving sort of a brief introduction about sort of the Egypt fintech scene?
Thank you very much, Ali, for having us. Thank you to Lex Mundi for bringing all the players within the fintech in Africa together for this webinar. It's definitely our pleasure to be here today representing the Egyptian Fintech Association and Africa Fintech Network. If we look at the fintech ecosystem in Egypt, you'd see very interesting developments over the past 5 years. The rate of growth of the ecosystem, the players, the partners, the amount of funding that went into that ecosystem is definitely unprecedented. I remember when we started working on building that ecosystem 5-6 years ago, we were only a few. Everybody knows everybody. The initiatives that we carry out, everybody reach out to everybody to make sure the initiatives are successful. Whenever we approach incumbent banks or insurance companies or governmental agencies with ideas of what we should do and how things should go, they would hardly listen, and that's to be like polite and kind to them. And then all of a sudden things changed. The governmental agencies started approaching those active players on the ground who have been preaching and putting in the effort to build initiatives on their own, completely bootstrapping, building and capitalizing on that we have on the ground, bringing in academia into the scene, working with non-for-profits that can offer some help and support, the angel investors on the ground, even before there was a size of activity on the venture capital funds on the ground. It's I would say it's interesting. Now we can call it an ecosystem. So now if you have a fintech startup or have an idea in mind, you know where to go if you want an incubator, you know where to go if you want to be accelerated and you're seeking seed funding, you know who to call, and you have access to everybody within the ecosystem to get the support and help. You have access to the mentor networks, you have access to angel investors, and of course you have the Egyptian Fintech Association bringing all those players together on the same table as a one entity, one go-to that can actually offer that help and support on the ground. The number of fintech startups is growing as we speak. Startups that were incorporated 4 or 5 years ago, now they are making presence in the market. They have started to serve customers. So of course it's really, really exciting times, and we're definitely pleased with where we are today. Things are going to even improve now that we have the regulatory framework in place that is going to enable a pipeline of fintech startups that can legitimately start serving customers, start partnering with banks. Things are going to accelerate even at a faster pace going forward.
Okay, no, brilliant. Thanks a lot, Noha. And I'm sure we're going to touch on the regulatory piece in just a bit. But my next sort of question as well on just giving an introduction is going to be to Mikhail. So does that story for Egypt sound similar, different? You know, if you could compare and contrast the story with Mauritius, I'd be really grateful.
100%. Thank you for the opportunity, and thank you to everybody for joining us today. So from Mauritius as a jurisdiction perspective, I think we were a little bit late in the game. Noha and her team have been around and creating an ecosystem over the last 6 years. We're actually celebrating our 2nd year anniversary this Friday. So very similar in terms of purpose, a government-driven kind of a neutral facilitator role, which the Fintech Association plays in trying to take all the initiatives that do exist out there and be the facilitator in the growth of this space. So it has been a 2-year journey. We're still quite new or nascent, if you will, but we've already seen a lot of successes in this field, not only from a regulatory aspect, which I know we're going to be chatting on, you know, things graduating from the sandbox to formal regulation, which is a first that's just recently happened, but also in terms of the type of innovations we're seeing evolving on the ground. So initially in the early days, as Noha probably had similar to her jurisdictions, you had your traditional or usual suspects, as we call them. You see the same people, 20 people at every single event. And now we've gotten more traction on the ground, and as an ecosystem and a jurisdiction, this is now an agenda line item from the PM's office to the Ministry of Finance, who recognize this as an industry that they'd like to grow. In which case, we're seeing some proper collaborations happening on the ground from where government is moving away from using fintech as a cool buzzword, throwing AI, fintech, regtech, insurtech, you name it, everything smashed together with the word tech, but now giving a real notice and real attention because they're realizing that from a job creation perspective, from an opportunity perspective on the ground, Mauritius being a very small jurisdiction, we can't compete in terms of natural resources on a scale of much bigger counterparts on the African continent. But that's the beauty of what technology brings to the table, the ability to provide your solutions at scale. And, if we are going to turn this into a fintech island, if you will, population of 1.3 million people, what ingredients and things do we need to place is on ground so that we move towards that shared common goal. So it's been a rapid rise. I think the understanding of fintech, even in a local jurisdiction, is quite limited. So moving away from throwing around words that we might not understand to actually understanding the application of this technology and how it's going to affect not only a certain sector, but our ability to move money across every industry, whether you're talking blue ocean, whether you're talking mining, agriculture, whatever industry you're in, that for us is what fintech is, the convergence technology that unblocks the constraints that exist within kind of the other industries and sectors going forward. For us, for example, tourism is a massive one. I think it's 11% of the GDP on last count. So how do fintech applications and does the technology be utilized in that space to make it more effective, cheaper, quicker, faster, more secure? So we're on our journey, we're on our way. We've got the right conversations on the ground. We've got people now asking the right question. And for me, the big win here is we've got the youth asking the right questions, which is important. 2 years ago, if you had to walk up to a graduate with an MBA in finance, and ask them what fintech was, there'd be very little to no understanding. Now we're seeing the youth not only driving the adoption of the technology, but also embracing this as the future of work. So how do we future-proof the jobs that don't even exist yet? So we're on that journey ourselves. Our mandate from government was slightly different in a sense that we're not Mauritian for Mauritius, which is, I think, quite unique. Our mandate from the get-go is to be Mauritian for Africa. And what that means is how do we collaborate, work together with other jurisdictions on the continent, for example, Egypt, who are rock stars, Nigeria, South Africa, and all the other jurisdictions. And how do we make sure that we not only collaborate, but take actions so that at the end of the day, we can not only lead to greater financial inclusion, which we'll talk about in the breakaway rooms, but also from a perspective of how do we get our innovations out to the rest of the world? Because there's the type of innovations that we're seeing locally, and you alluded to the fact earlier, are very user-centered, designed with a specific problem-solving mentality at heart. We just tend to forget about the mass commercialization aspect because we want to help people first. And I think for me, having the honor of working in quite a number of African jurisdictions, that is kind of our fundamental difference between Africa and the rest of the world. We're not driven by money first, we're driven by helping people. And then we tend to forget about we need to be sustainable bits in order to make sure we add impact at scale bits. So I think we're seeing a lot more equilibrium when it comes to that aspect, and I'm glad to see Mauritius being part of the table with our much bigger counterparts on the African continent like Egypt, working together around kind of the challenges that exist on the continent.
Oh, thanks a lot, Mikhail, and happy anniversary for Mauritius. I'm sure you're going to be going from strength to strength, and I can't wait to kind of unpack more about the exciting things that have been happening there over the last couple of years. So shifting gears a little bit, we've heard from Egypt, which is 101 million people, to Mauritius, which is 1.3 million people. And we're going to switch to South Africa, which, apart, of course, from its the size of the population, I think is recognized as one of the leading financial countries with a financial sector across the continent. It has been for many decades. So I'd love to hear from Joshua, sort of moving from a very mature financial sector to the exciting fintech. Like, how has that transition been, and what are some of the other things that people need to know about the South African fintech scene?
Thanks, Ali. I suppose what just to start is to say that certainly a lot of what Noah and Michal said resonates with me. I can certainly look back a few years, and maybe it's slightly more than the 5 or 6 that Noah mentioned, maybe 10 years ago, where on the fintech type deals, it was the same people, and I knew it would be the same lawyer who was going to be sitting on the opposite side of the table. And if it wasn't my one client, it was going to be the other that were doing the deals. And so that's certainly where we were. And now, if I fast forward a few years, we certainly are in a different world, and it's become incredibly cool and hip to be in fintech, to be a venture capitalist, to be an angel investor. All of these things which I think the industry thrives on. So I think the industry is in a good state. We've got a number of incubators, we've got a number of accelerators. So really there is a lot of work being done to try and grow companies in the space. We'll get into the regulatory piece later, I'm sure, in the discussion, but there is a lot of positive actions taken by government to try and encourage financial inclusion, to try and make some of these things a bit more user friendly. I won't bore you all now, because I'm sure we'll get to the exciting regulatory discussions later. But I think one of the other really exciting things about the space is the participants in the industry at the moment. So we've seen a massive influx over the past few years of some of the institutional investors, so some of your insurance companies, some of your banks, who are all now investing off their own balance sheets into fintech. And again, I think a similar trend as was mentioned was kind of really what is fintech. And so we've got InsurTech forming a big piece of that, but a number of the insurance companies are investing heavily in InsurTech, in trying to grow the space, and also then obviously to do it for an investment purpose, but also to try and change their business model so that they are embracing these things. So we are in a good space, and I think we've also had a couple of nice success stories recently. I was very fortunate to advise TSG on their acquisition of Luno recently, which closed a few months ago. So that was a really exciting deal, and I'm sure we can chat about it later on. But what was great is just the success story that there is for South Africa and for Africa, and I think it kind of helps all of us when you get a very credible international investor seeing a South African or an African success story. I mean, there was the same thing announced last week with Paystack, and I think these things are only going to be positive for all of us. The more successes that we get, the more founders that are shown on a global stage to be rock stars, to use your words, Michal. I think it's going to help all of us. So I think to kind of bring back to the original question, what is the state of the industry? I think it's good. I think that there's lots of exciting things happening. I think if we look at COVID and what that's done, and I'm sure we'll unpack that a bit more later. I think fintech has been one of the more resilient sectors. I think the ability to scale up and scale down a business has been highlighted, where some other kind of bricks and mortar industries haven't been able to do it as well. And the ability, when you're sitting at home in a lockdown quarantine environment, but you're still able to shop online, or you're able to do those sorts of things and make payments because of the infrastructures that have been created. I think it's simply highlighted what we're all trying to achieve here, and the potential for this space. So yeah, I think it's really been a really exciting couple of years, and the people that I'm talking to, my clients that I work with, are all doing really interesting things, and I think we've got a lot of exciting things to come over the next few years as well.
Brilliant. No, and congratulations on the recent close. I think that's fantastic news for everybody. I'm glad you also mentioned the Paystack. I think everybody's very excited about that deal. It's a great success story for the entire continent. So moving on to the regulatory piece, I think one of the exciting things about tech is that it's really pushing the boundaries. And with some tech, you're pushing the boundaries so far that you're going into sort of new space, which may not be regulated. Whereas I think fintech has a slightly different place because of the importance of finance to the monetary infrastructure of the country. Regulators need to approach it slightly differently than maybe other sectors because of the potential benefits / harm that it can do to the economy and the sector. And there's been a lot of different optionality as well as trends over the last, let's say, 10, 15 years. So, Joshua, I'm going to start with you because I think South Africa has obviously had a longer tail from the rest of the markets that we've looked at. So do you mind kind of giving us an idea of the recent regulatory changes and the impact those have had?
Sure, thanks, Ali. So I think you're right. I mean, I think you know, with tech, the advancement often is ahead of the regulation, and so the regulators are often trying to catch up and figure out what's going on, trying to understand things, and then they're trying to regulate either to stop you or to put you back in your box. You know, and I think if I look at our experience, I think you're right that fintech is slightly different in that it requires probably greater scrutiny, but to some extent, I think our regulators have looked at it and said, we don't really know how to regulate this, and we're not even sure we should. And so if I look at something like crypto, you know, it falls through a number of gaps, which can make it quite complicated to work with because you're never really sure what you're supposed to be doing. But I think the regulators accept that it's a very important part of this sector and this industry growing. And so they've been quite practical so far. They've been certainly my understanding is that they've been quite keen to engage with the various players, to really sit down and talk to them. And my sense from those that are in the industry is that if you are transparent with the regulator, you're sitting down, you're taking them into your confidence and explaining to them what you're doing, why you're doing it, what your customers need, they are quite understanding and accommodating. You know, one of the things that we have happening in South Africa at the moment is called the regulatory sandbox. And I think it recognizes the point that I've just made, that no one necessarily knows what's going on here and doesn't necessarily want to get in the way, but we need to be responsible. And there are, you know, third parties' money that is being put at risk and so on. So what the regulatory sandbox is let's call it a controlled environment. I suppose sandbox is a good description of what you would have your kids playing with. You know, it's a controlled environment. The regulators are there. They're holding your hands. They're watching to see what's going on. But you're able to go and work with them and really demonstrate what you're doing under their supervision, and kind of hopefully at the end we'll come out with an outcome that says we know what you're doing, we understand it, it's okay, we've tweaked whatever we need to make the regulations work. So that has been a very exciting development over the last few years. We also have a competition law paper that was released recently, which deals generally with kind of the digital landscape. It simply said, you know, in relation to fintech, you know, we're watching the space, we're monitoring, we need to figure out what's going on. Again, all of it to me sounds positive. You know, the competition authorities, you know, they're not trying to clamp down on it. They want there to be fair competition. That's my sense. So I think all of that to me sounds fairly positive. We're also in South Africa, we have a system called the exchange control regulations, which is a system which controls the export of capital. Again, it's a system that I think is trying to catch up to some of the fintech changes, and I think we'll see some changes in the next few years to make sure that there is certainty that if you are in the space, that you know what the rules are, you know what you're allowed to do and not allowed to do. And so generally, I think the regulatory landscape has been positive in how it's adjusting, and certainly, you know, apart from a few statements I read every now and then from government officials, which are slightly inflammatory, for the most part, I think the general theme is very positive. Is we're open for business. We're trying to figure out how this works. We're trying to help businesses, and we see you know, and from government, I mean, I think they see the massive opportunity to promote financial inclusion. You know, I think that this, as you said, the leapfrog effect. I mean, if I look, I was reading through some stats earlier, and I found a Deloitte report which said that whilst there's 157% penetration rate in South Africa in terms of people having bank cards and mobile devices, still 50% of all the transactions in South Africa are cash transactions. So if you look at the scope for growth, what that can do in terms of safety and security for those, rather than carrying cash and so on, there's a massive opportunity and need to try and move the dial forward. So I think government recognizes that, and they are trying to bridge the gap quite quickly.
No, thanks a lot, Joshua. That's really insightful. I think before we move on maybe to the other markets, just out of my own curiosity, since you've been in the game for such a long time, sort of pre-sandbox, post-sandbox, like, would you say that was a quite transformational shift, or was it, already pre-sandbox, there was still a collaborative approach from the government? I mean, was there a change of mindset there, or can you give some insights on that?
Ali, we're still in the sandbox, so we're still waiting to see the results. So I think it's probably premature to give you a post sandbox view. But I think I think the shift of the mindset from my vantage point has been from a few years ago where maybe the regulators didn't necessarily know what they were even looking at. I think they now really do seem to understand where the market's going. Maybe not moving as quickly as some people would like, but I think certainly there is a desire to get there, I think, which is quite strong.
Okay, brilliant. Thanks, Joshua. Okay, I'm going to shift over to Noha. So Noha, we've heard a little bit about South Africa and their experience when it comes to regulation, and specifically the sandbox experiment, and maybe the mindset with regulators when it comes to how collaborative and supportive they are. Especially perhaps that's been accelerated, I think, in a COVID world when it comes to some technologies. So does that ring true for you? Does this sound like a similar story, or have you had a different experience when it comes to Egypt? Okay, I think we may have. Oh,
I'm sorry, broken. I couldn't hear you. Can you repeat the question?
No worries. Sorry, Noha. So my question was, I think Joshua was very helpful in kind of outlining the South African experience, especially when it comes to regulation and their current sandbox experiment, and some of the other sort of trends that they've seen, especially post-COVID. So my question to you was, does this sound like a familiar story from the Egyptian experience? Or, especially when it comes to sort of sandbox versus maybe other regulatory devices, or do you see sort of that contrasting with the Egyptian experience?
Well, we can relate. More or less, the exact same efforts and initiatives that were taken out over there were carried out in here as well. We were lucky to work with the Egyptian government on the Fintech strategy launched a couple of years ago, part out of which was the regulatory sandbox that is currently used to build fintechs, assist their viability, and ensure that they are ready prior to going live and partnering with banks and the like. And they're actually ready to accept their second cohort very, very soon. On the laws front, we had an amendment and update to this regulation in the country. We have just seen an amendment on banking law covering fintech and digital banks licenses. We are currently in the process with the other regulator in the market. So we have the central bank regulating banks and entities offering banking services, and we have the Financial Regulatory Authority that regulates and governs other financial institutions offering non-banking financial services such as insurance, microfinance, leasing, and the like. So they're currently working on their own fintech regulation. We were part of the discussion of sitting and putting that framework over there, and it was actually exciting to see them looking into building the right regulatory framework to support alternative sources of finance, such as crowdfunding and peer-to-peer lending, which we are going to be discussing in one of our breakout rooms in details pretty soon. That's mainly it. Those are the latest developments on that aspect, on that facade.
Thanks, Noha. Just before we move on to the Mauritius experience, Noha, can you maybe also talk about the mindset? I think that's something that I hear a lot about. People talk about maybe a mindset shift.
Yeah, thank you very much for bringing that up. That's of course such an interesting topic. I mean, doing what I'm doing prior to quitting corporate banking, I was in charge of fintech and innovation within the bank. My bank was the leading commercial bank in the country, the most advanced, the most open-minded amongst the rest. We definitely faced a lot of challenges getting that buy-in and that support internally, although our efforts and activities were uploaded by everybody outside the bank. The story to take out of this is that collaborating with fintechs, adopting that collaborative mindset, adopting technology and digitization within the financial industry amongst incumbent banks, insurance companies, and others, the barriers to it is not just the technology infrastructure or the technology readiness, as we say. If you ask me, the biggest barrier and obstacle in there is the corporate culture readiness. And it's not just the amongst the banks or financial institutions that cause that delay or make it hard to progress and grow for the fintechs in general, but also on the side of the population. If you look at, I mean, we're lucky in Africa that the majority of our prospects, potential customers for financial industry are young. And when you look at Generation Z, they are very tech savvy. They are accustomed to using digital services and the like. But we still have our parents, we still have our grandparents, and currently they define more or less the purchasing power. And this is going to continue to be the way things go for quite some time. So definite cultural readiness is key. We, however, have started to see that change and shift post-COVID. COVID did us favors that a lot of the initiatives that many governments and many organizations have attempted over the past few years with no results whatsoever. Now we are doing the right thing just because we have absolutely no option but to do the right thing. And the right thing in here is building on digital capacity, designing solutions that can be sold and serviced digitally, focusing on digital marketing, trying to acquire a new market segment that can actually be served and are interested in digital finance and the like. Are things changing? Yes, they are. Now the incumbent banks are seeking support from those players within the fintech ecosystem that used to approach them years and years ago, and they used to churn down those offerings because they don't have to. I mean, we have a 30% growth in our profits year over year. Why should we invest in building platforms that serves others who have really thin profit margins, and they cost us a lot to actually reach and everything? Now they are reaching out. They can see the value in there. As like people in the financial industry, it's all about the bottom line as far as we're concerned. So once you offer a use case that can be actually implemented on the ground and you prove it profitable, they listen to everything you say, you have them on board, and things go well. So definitely the culture is changing. It took us a while, took us a pandemic as well to change it, but at the end it is changing.
Oh, brilliant. Thanks a lot, Noha. Okay, so Mikhail, we've heard about bottom line, double bottom line, triple bottom line. We've heard about COVID. Obviously, it's a global health tragedy, but there are some positives that have come out of that. I think we've heard that from Egypt, from South Africa. I'm also very interested to hear about the Mauritius experience when it comes to those matters, the mindset also of the regulators. I know that maybe you have a more nascent ecosystem, but you're coming out of the blocks very strongly. So, what's the strategy there? And finally, also, we've heard that, in some of these markets, there's a multi-pronged approach when it comes to some of the regulators. So a lot of different touch points. Has Mauritius gone the same way, or have they gone a different way? So we'd love to hear your thoughts on that.
Oh, thank you. So maybe start with COVID. So I think it's been, from a financial and technology and digitalization of the Mauritian economy perspective, the best thing in a long time that could have happened. I think people, to Noha's point, a lot of us in Africa, the purchasing power still remains culturally in kind of the senior individuals of the families. So it's had a massive positive impact in this industry. And out of all the sectors locally, for example, we were the only one that grew during this period. So there's massive opportunities. And I think the use case that they were looking for has happened. From a regulatory perspective, I think it's Mauritius is quite unique. So the RSL, the regulatory sandbox license, has been already active for the last 2 years. On paper, I'd put it down there, right up there with the FCA and MAS in terms of, the thinking behind what it needs. So the regulators have been quite forward-thinking when it comes from an innovation perspective. I just want to make a quick point here that I always joke with regulators that they are good. Their full-time job is regulation, not understanding innovation or technology. And I think that's always kind of the challenges that are always faced is, how do you regulate something that you don't understand? Or you don't understand the business model because it hasn't existed yet. So it's been, I think in Mauritius, they took quite a proactive approach in trying to say, well, if we don't understand it, let's put them through the sandbox. Which also has all the kind of regulators. Similar to Egypt, we have BOM here, so central bank, and we have the FSC, which is the non-banking regulator, and a couple of other institutions that are part of that journey. So Mauritius is quite cautious when it comes to reputation, AML and KYC, to the point of maybe sometimes being a little bit too slow to react, but coming from a perspective that as the second most regulated industry outside of medicine from a global perspective, rather let's make sure we get this right. So the sandbox, it's the concept's amazing. Even the FIU, so the Financial Intelligence Unit, sits on the part of the sandbox to understand, how this technology is going to impact illicit flows, if there are any, or what are the opportunities or the challenges facing that environment. But it's really given an opportunity for not only for local innovations, but we've got a lot of companies from across the globe, Singapore, even members of the hub, Germany, Singapore, Australia, US, who are looking to set up offices in Africa. And it provides an opportunity where, yes, you've got to meet certain criteria, as they all do. But even from a formal regulatory perspective, even the local banks are complaining that the RSL, the fintechs themselves, are getting way too much leeway to play with. To give you an example, we have strict KYC and AML requirements for the banks, which are stipulated down. But for a fintech going through an RSL, for example, they don't need to do in-person KYC; they can do eKYC. And those kind of checks, which the normal banks can't even do. So you can see they get a lot of freedom to play, obviously with oversight from a government perspective. And in the Mauritius environment, it's slightly slightly different to some of the other models, because even though we have the central bank and the FSC, the non-banking regulator, we're quite unique in the sense that the sandbox, the regulatory sandbox for fintech activities actually sits under the Economic Development Board. Okay, which for me is I haven't seen this model before, but what it does do is, in line with promoting this and trying to understand it in the industry, it also gives the EDB more flexibility because they're not the regulator. They get to know the types of businesses a little bit closer. They need to they handhold in terms of trying to promote this jurisdiction, etc. So they get to understand the business models a bit more, and therefore the information flow from a first point of contact being an EDB to passing information to the central bank and the FSC is slightly better, as opposed to them just going directly approaching the regulators. So they have some information, so they're not going in blind when they put their case forward for the RSL to the various regulators. So that's kind of the local scene here, a little bit different, a little bit nuanced in the sense that, you know, most of the sandboxes sit under either the central bank or the non-banking regulator. But that's kind of the environment, and it's worked. But we're also obviously learning while we're going through that. And the success for me for that, it would be the P2P. So 20 months ago in Mauritius, there was no formal regulation around the P2P environment. We had the launch officially by the non-monetary regulator, who this falls under a month ago now. Where, you know, the regulator learned throughout the 18th month journey, adapted the regulation and put something on paper that was industry friendly while maintaining safety and stability in the financial system from that perspective. So for us, that was quite a big win. You know, because the end game here would be, if this is a regulated industry and it's not over-regulated, could we then make it passportable? In other words, could we tie in with some of the initiative in East Africa, where they're trying to standardize the framework of regulation for the P2P regulation across numerous jurisdictions? Could that mean that a company that opens up and wants to open up offices in one of the African jurisdictions could the very next day trade in its next door neighbor? You know, so there are some quite advanced discussions from various jurisdictions and regions within Africa, and locally, Mauritius, the regulators, I think they've realized, you know, they can't see the wood for the trees when it comes to that, and they need help. You know, so interacting with industry, you know, we actually encourage, as an association, we encourage, you know, not even the upper echelons or the decision makers, we actually encourage middle managers or middle regulators and junior regulators who are training to actually come to the hub, engage with the fintech, so they can better understand the technology and have line of sight of what is happening on the ground, so that they understand it when it comes to that perspective going forward. So the regulatory environment, we've got obviously challenges like everything else in the world, but I think they are quite forward facing when it comes to fintech and fintech regulation. And then from a central bank perspective, last year the central bank launched the MOCAS, which is a payment switch based on open API, open banking, trying to promote an environment of equal opportunities and API integration between the various stakeholders to try to play level the playing field. So once again, I think the governor kind of showed their intent, or the central bank showed their intent to say, we're taking this seriously. We're taking the adoption and digitization strategy seriously, and what can we do to create an environment that is pro-business, pro-safe business. So crypto, for example, you know, 18 months ago was a swear word, and you'd be chased out the building while being whipped at the same time. You know, earlier this year we had custody license, STO regulation, formal regulation putting out, digital assets coming out, even to the point where crypto exchanges now could go through the sandbox themselves. So I think it shows the kind of the mindset that the regulators have adopted locally, but they're also looking towards what kind of Singapore, Asia is doing from a local perspective, but they're also really looking to see what the rest of the African continent is doing. You know, so they are reaching out to the other regulators to kind of learn and understand, because once again, I joke with the regulators, how do you educate people that think they know everything? I'm still very friendly with regulators, but you know, they just need to engage more of their peers who have learned from the experiences, engage with the private sector, and I think locally they're becoming more and more open to those ideas.
Oh, brilliant. Okay, so it sounds like you know, you might have taken a bit of time to get things off the ground, but once you have, you know, a very spectacular experience, and you know, obviously congratulations on all of those achievements in quick succession. It sounds like an accelerated.
It's hard work, Ali.
It sounds like a lot of hard work. No, it's you know, brilliant. Okay, so we've talked a little bit about sort of the origin story, as it were, of fintech, and maybe there's different markets. We've talked a little about regulation and you know, how people have approached things slightly differently in the different markets. I'd like to kind of shift gears to looking forward, looking to the future. So Noah, I'll start with you. You know, like when people talk about tech, all of the techs that we talked about, InsurTech, RegTech, FinTech, TechTech, you know, you've got to kind of future-proof things, or things about how things can be, as opposed to be grounded in the, you know, the here and now. And fintech is a very powerful force in that respect, right? And as we said, you know, it's not only about bottom line, but potentially double bottom line, triple bottom line. So with all of that sort of thing in mind, you know, taking out your crystal ball, what are some of the things that you see, you know, being shaped by fintech over the next few years?
Thank you, Ali, for the question. That in order to understand where we're heading, look back a little bit and see where we have come from. Looking at the financial industry, with a focus on the banking industry, we have definitely failed serving the main objective that we were made to serve. Mainly, the financial industry was developed, banks and the like, in order to channel capital, funds from people who do not have a productive use for it and have excess of it, to others who have the productive use but do not have the right capital to build and to create value to the societies where they banks have done anything but that over the past 200 years, ever since bank started. We shifted away from our focus and main goal, and we ended up in a world where you have 1.7 billion unbanked population, where 70% of women-led businesses have either no access to finance, none whatsoever, or at least inadequate access to finance. And you have the banks serving the creme de la creme of the society, focusing on high net worth individuals, serving large corporates without paying attention to the majority of the population they're supposed to be serving. Looking into that, it's not just the social aspect that I am discussing in here, because the industry is all about making money. That's a fact. It's having the potential to grow and sustain revenues over the long term. You cannot grow serving the number of people you are serving, given that they do not grow at the exact same rate. I mean, that segment that everybody is attending to does not grow at the same rate where the rest of the segments grow. So they have to attend to the needs of the unbanked and the underbanked, and micro and small and medium businesses. What happened with the disruptive technologies growth and introduction of tech-enabled business models and the rising of fintech is they found themselves in a situation now where they have other market entrants who really understand the needs of those segments, who can serve those segments profitably using technology, who are very agile on the ground and make things faster than they are. And now they found themselves left out and they started looking around and asking questions. What's happening? What do they do? How can we benefit out of this? Where they are. Answer your question on the future view of how things are going to be, how financial services are going to be distributed in the future. Well, my answer may actually shock you. It's not going to be about fintechs. It's going to be about big techs. The companies that have built on social inclusion. They have offered access to everybody. They have onboarded everybody. They have built a data trail on everybody. And now they are ready to build that layer of financial services on top of their businesses. The likes of Facebook, the likes of Apple with all their activities and services that they offer, those are the ones who are going to be reaping most of the benefits out of the technological advancements, serving everybody. They have already built that database of customers and users that they can build upon. Doesn't mean that banks are going to cease to exist. It doesn't mean that fintechs do not have an opportunity. Banks collaborating with fintechs might have a chance. Because again, end of day, it's a very regulated industry. You have central banks in control. They are not going to be exactly accepting or welcoming to such interventions coming from outside, as long as they can control it, Mikhail. Yes, they are not going to allow that to happen. So we must collaborate. Banks need to understand where their comparative advantage is. You know, in economics, they taught us that countries need to understand where their comparative advantages are and to actually capitalize on them. Direct all the resources into benefiting, maximizing the value they get out of that comparative advantage. It's the exact same concept that has to be applied. Banks need to know where their areas of strength are. They need to collaborate and work with fintechs to close those gaps. Fintechs need to get away from that competitive mindset because fintech cannot compete with banks. Not now. Maybe in 20 years' time, it can be feasible, but not now. Banks are trusted. Banks have the customer database. Banks have the financial credit history. Banks have everything. Yet there is an opportunity to grow fintechs that can actually create value, that can scale, that can offer sustainable growth and be a good investment, of course, for angel investors and VCs, but it has to adopt that collaborative mindset. And fintech entrepreneurs need to stop building to sell. They should start building to scale, grow, and sustain, because this is what is going to make a difference. So the future is a collaborative future. We are going to be working closely with fintechs to serve the underbanked, to create win-win scenarios and generate value for everybody.
Okay, no, thanks, Noha. Some big statements there. I'm sure the big tech people on the on this meeting are going to be very happy with that. No, but fascinating. I think there's definitely a lot of room for a lot of change. Joshua, does that ring true to you? Do you have a sort of a different future in your crystal ball?
Look, there's a lot of truth in what Noha said. So I think she said it more eloquently than I'm likely to put it. But you know, I don't want to make the same points. So let me take it to a slightly different direction. One of the things that I think is quite interesting as to what fintech can do is the other opportunities that it can create. If I think about the take up, and I think the stat I mentioned earlier about 50% of transactions in South Africa are still cash transactions. I mean, if we explore the question as to why that is, so one, it's probably a lack of infrastructure, so lack of access to data, probably a big question around trust in how the systems work, and the ability to put your details into a system you don't necessarily trust and understand, and many other reasons, right? Now that creates a massive opportunity to now invest in the infrastructure, to create businesses around cybersecurity, where you now need to protect the information that's going to be stored, to create access to data, so all of these things are tangential to fintech, and the infrastructure, the data may have nothing to do with fintech, but it is an empowering aspect of it, and I think the two need to go hand in hand. So I think without wanting to repeat all of the things that Noah said, I think another part of what is going to be reshaped is all the industries that come alongside. I think fintech, the ability to create financial inclusion, to have this societal impact, I think is massive and can't be avoided, and we all need to embrace it. But I think one of the other really exciting things is what's going to come alongside that. So I do think cybersecurity is going to be a massive thing over the next few years. Access to data, storing of information, the ability to create data for the use in cell phones and those sorts of things. It really will be something where I think there'll be some investment. The other thing that I wanted to think about it or talk about, and this from a much more personal level. I mean, I was trying to think about it earlier today. When the last time I actually had cash notes in my wallet was, and to be honest, it could be even as long as a year. And that's because in South Africa there are a number of easy to use point of sale systems, payment applications, instant EFT transfer systems, that you actually don't need cash. Now, that is fine, and that's great, and I feel a lot more safe without carrying money, and I never have to think about getting it. But there are some industries or some sectors or service providers that were at least drastically impacted for a while. So in the CBD where I live, wherever you park your car in the street, you need to pay for your parking, right? So that's fine if everyone has a note in their pocket that you can give to either put into the system or pay to the person who's the attendant. But when the payment system's developed and no one's actually carrying cash, there's now a massive gap. So what we've now seen is that the parking attendants now have the QR codes that you can scan on your phone and pay. And it's seen even the adoption at that level has been massive, and I think is really taking different industries in a different direction and helping to kind of bring people along and to ensure that there isn't this loss in revenue opportunities. So yeah, I mean, I think how will it reshape the industry, the financial industry? I think in a massive way. I think it's only a matter of time before everything is done using different types of fintech, and and we're no longer using the traditional methods of banking and so on. But I think that there will be some it will take time to move people away from cash and those sorts of things, and there are a number of reasons why. But as I said, I think that's where there are lots of opportunities to really try and have the associated industries that are going to help the fintech industry to come along.
Brilliant. No, I'm very envious of how cashless South Africa has become. I must say, without speaking out of turn, I think Egypt still has some ways to go on that front. But Mikhail, you have the last word on this. What are your thoughts?
100%. I think both Josh and I have pointed out, everything that is going to happen. Thank you for the crystal ball, guys. I think the way we're going to work is more the fact that the banks and the fintechs are realizing they actually need each other in the equation. If you look at every fintech around the world, there's still a brick and mortar behind them somewhere along the way. And if you would see what's happening in Singapore and Asia at the moment, banks are very quickly realizing that they're going to be the custodians of data, and why not outsource the client-facing side, the product development aspect to the fintechs on the ground. which are quicker to market, can put better products, can be more innovative in their environment, less constraints. In other words, they can build consumer-focused products that are needed on the ground and can onboard 20, 30,000 clients a day, whereas a more traditional banking infrastructure is not geared for that. So they've realized in that neck of the woods that big banks and smaller guys need each other in an equation, and that's the only way they will both survive moving forward. And what we've seen in Africa, we're starting to see the shift there. Some of the big banks from SA, for example, EcoBank and other kind of the big players are in Africa have already made those realizations. And they know it needs to happen, but keeping in mind that at the end of the day, the focus is that banks have to answer to shareholders. They have a lot of legacy systems that they still utilize. There is a lot of regulation, heavy burden regulation that they have to comply with. So it's going to be a matter of time. So it's coming. The mindset is definitely changing from exco level to the big, from banks in Africa all the way down, from a competitive nature to a collaborative, and even to oh wait, I need you to be in business in the next 20 to 30, 40 years going forward. And for me, from a fintech perspective, is to echo Noah's point, is I think we're seeing a move away where people are actually tired on the ground of being judged who they are based on how many zeros they have on their bank account, and the fact that they don't have the same equal opportunities as those people that do. So I think it's also being part of a technology digitization element from a financial technology perspective, but also from a social movements perspective. I think people on the ground want change. The ability, as Noah mentioned, 200-300 years of the financial services that we've had, where a few people make a couple of bad decisions, greedy bad decisions, and millions of people lose their pensions as a result, are over. And I think that's what's why the fintech revolution, if you will, or the pace or adoption of fintech over the last 10 years has been so great and paramount, because it's bringing those people back into the formal digital economy that we've actually forgotten about. So crystal ball, my hope and dreams would be everybody's part of the system. Everybody understands the system. Everybody is educated from a financial literacy perspective. They understand what this is all about properly. So we don't have loan sharks out there and putting entire generations back into debt, and just in a different format. But I think more collaboration and a more need of working together for the benefit of all. That's my wish and goal.
Brilliant. No, thanks a lot, Mikhail, for sharing your thoughts.
Can I do one little thing in here before we move on? Just a teeny tiny thing. Actually, Mikhail mentioned a really important point, and that's financial literacy. Financial literacy leading to financial inclusion. The overall objective, the end goal in mind, is financial independence. This is what we are all working towards, to help human beings be financially independent. And that's freedom. I mean, that is freedom. That is something that we should support. It's legitimate right. It is the most legitimate right. And until people are part of an inclusive financial system, until people get equal access finance and to other financial services, that independence is not going to be achieved. So we just hope and work towards a future where people actually do have their financial independence.
Great. No, thank you, Noah. I like ending things on an altruistic note. So thank you all for sharing your thoughts and views. We're going to be zoomed in now into our breakout rooms, and then we'll come back and share sort of the key takeaways. So over to you, Dan.
Thank you, everybody. Judy is going to move us all.
Sorry, didn't finish off there, Josh.
Cool. I think we all should be back now. So perhaps if I can ask the people that were hosting or moderating each of the breakout rooms to maybe give a quick snapshot of the key takeaways that they had from their discussions in the breakout rooms. Joshua, Mikhail, any of you like to start? Noha?
I'll kick off first because I'm Josh, being a lawyer, he's given me the honor of doing that. You know, in terms of, I think quite a few things were said. I think more time would be needed to kind of get greater insights and participation from everyone. But I think, you know, to Noah's point and to Jeanette from Kenya's example, you know, financial literacy leads to financial inclusion, and this has had a positive impact of people on the ground. So not only ability of moving money quickly to people who need it at a smaller cost, but the fact that people are more aware of the financial services and products that exist by utilizing technology such as mobile money has had a positive effect on communities. And the fact that the coverage is so wide in this example we used here in Kenya, it's been a very positive transition with that respect. Fintech all the way.
Brilliant.
Sense, yeah, I think that was a good summary. There were two comments that stuck out for me, and they kind of spoke to the same point. I think Paul had made a comment and he used the phrase "building trust with regulators," which is something that Luno had worked very hard to do. And Leon, who was also in our group, I think used the phrase "understanding value." And to me, both of those things just speak to education, right? And so whether it's educating regulators, whether it's educating the population that's using fintech and how to use it and kind of bridging the trust gap, you know, I think that there's a lot of work that we all need to do, assuming we're all interested in the success of the space, in this educational role, and whether it is to the regulators or to consumers and so on. But I think there's a big part is really to try and bridge that gap of understanding. So that was my kind of takeaway over and above what Michal had said.
Brilliant. Noha, would you like to have the last word?
Oh, always, of course. See, now Mikhail is laughing. That's why he says all the time. But actually, I can relate
unusual.
to. As Joshua said about that, an element of trust with regulators, we actually, and that mistrust that people associate with technology, that they don't know what and they don't definitely when you have a regulatory body in place that actually gives that comfort to the consumers and the audience that this entity as a fintech is not operating on its own, and that it follows for consumer protection, data protection and the like. That makes a huge difference as far as the adoption rates are concerned. Another element that contributes to building that trust is when people have technology, its potential, it makes also, it affects the adoption positively. And end of day, it's all about offering a use case that's of value to the people. So even if people don't understand, even if they have some issues of trust, but you are tackling an area of pain that they face, their daily lives, they are going to be adopting your solution and using it. At least a few of them, and those few are going to be your selling point to the rest. That's the point.
Brilliant. Well, thanks. I've got nothing to add to Noha, except to say thank you to all of the speakers. Dan, over to you.
Great. So thank you, Ali. Thanks for moderating. Thanks to the panelists as well, of course, for their time today, for sharing their experience. As I mentioned at the beginning, this is actually sort of part of a series we're doing each month. So if you'd like to learn about previous ones or future ones, please do get in touch with us. And finally, thank you to all of you who have given your time to come and listen to us today. And that concludes our formal presentation. Thank you very much and have an enjoyable rest of the day.